Andy. Great. Well, great to see everybody here today, and thanks for coming out. A quick introduction on the talk. We're going to be talking today about investing in growing European software businesses. A nice disclaimer page for everybody that I won't read out loud. So just a very, very quick couple minutes on who Battery Ventures is. We are a global venture capital private equity fund that invests in technology businesses. We've got 6 offices worldwide, most in the US, and then an office in London and an office in Israel. We have raised about $7 billion since inception, and we operate as one global fund, which we find as really important, and it's going to be part of the talk today, because it allows us to really help our European businesses as they expand into the US, and our US businesses as they expand back into Europe. We are stage agnostic in how we think about investing, and what that means is that we will invest in some startup companies, but for the most part we will invest in growth businesses, so businesses that are doing already millions in revenue and up to hundreds of millions and going public. We will also do majority investments and buy companies as well. But where we stay super focused is on technology, and within technology, about 70% of the investing that we do is within software. So everything from the application layer up and down the stack into the data center as well. We've had over 300 M&A and IPO events in our 35-year history. So this is really kind of the core focus of us is in investing in software. We have been investing in Europe since 2000, and you can see from this chart that we have been increasing our number of investments. We've now invested in over 50 European businesses in 13 countries, and so we are big believers in Europe, which we'll come to in a couple of minutes. So that's a little bit on Battery. Maybe just moving on to the next section here, spend a couple of minutes just talking about where we think European technology ecosystem is from an investment cycle. And as we kind of look back on the last 4 or 5 years, we've seen really great performance within the European technology ecosystem. In TechCrunch and many other publications, people like to talk about the number of unicorn businesses, which is defined as the number of businesses with $1 billion valuation or more that are growing very quickly. Over the last 4 years, there's 2.3 times as many of these businesses in Europe as there was in 2014. So there's now up to 68 of those companies. If we look at the amount of exits, so the amount of liquidity provided back to investors and founders from growing technology businesses, this has doubled over the last 4 to 5 years. If we look at the amount of money that's been invested into European technology companies, this is up almost 7 times over the last 4 to 5 years, showing just a huge amount of investment into the ecosystem. And if we look at the number of companies that have raised more than $200 million, so really large financings, this is up 3 times over the same period. And we're also seeing, as evidenced by Vodafone being so involved in startups as well, the amount invested by corporate VCs, which we kind of see as a nice metric to think about other players in the ecosystem paying a lot of attention to growth within a geography, is up almost 2.5 times over this period. So over the last 5 years, we've seen tremendous growth in the European technology ecosystem, which has been really fun to be a part of. Now, if we compare it to the US, it still lags behind the US still quite a lot. And we'll come back to this in a moment, but I think from our perspective, there's no reason why we think Europe can't catch up over eventually. The number of unicorn companies is half of what it is in the US. The amount of private investment into technology businesses is less than half in Europe than it is in the US. And the number of venture capital and growth equity funds that are raised for investing in technology in 2018 was only 20% of what was raised in the US. And the natural question for us to ask ourselves is, well, can you look at Europe and see this fragmented geography with multiple currencies and multiple geographies, and can you compare that to the US and say that they have a similar potential? And our view is that there's no reason that Europe shouldn't catch up to the same amount of number of businesses and amount of investment within technology as the US counterpart. The population is 60% bigger in Europe than it is in the US. The GDP is approximately same. The landmass is significantly smaller in Europe, which means that there's a greater population density, which really helps with variety of an adoption of technology. Both are largely services-based economies, and using smartphone penetration as technology adoption, both countries adopt technology very, very nicely. So, summarizing this section very quickly, we really believe in the continued growth of the European ecosystem for technology startups, and we are going to continue to invest behind that trend, and believe despite the growth over the last 4 or 5 years, there's just tremendous growth to come here in the near future. Next, did that work? Yep. Great. So the next slide here, as I mentioned at the start, we are largely investors in software. So thought I'd maybe share a few thoughts on where we think we are from a software within our economy, and how important software is going to be in the future here. And we really believe that we are in the early innings or the early stages of a long trend of software continuing to be a larger and larger portion of our GDP. There's kind of 5 forces here that we'll quickly drill into that we think are driving this trend. The first one is that existing software markets continue to grow as people just continue to adopt technologies. Software is now infiltrating what were previously niche markets that people kind of did things manually. Software is replacing hardware. Software is replacing labor in many cases, and we're kind of seeing every large company start to become a little bit of a software company, which we'll talk about in a moment as well. So today global revenue from all software businesses is less than $1 trillion. We see that growing at 5% CAGR. All the way through to 2050, and continuing to be a larger and larger portion, reaching 6 or 7 trillion in revenue in the years to come. So let's just quickly go through some of those trends. The first one here, if we look at what are very, very traditional software markets, customer relationship management is doubling over the 4 or 5 years from 2016 to 2020. The enterprise resource planning market, which is accounting software solutions, is growing 30-35% over that period, and business intelligence, which I'm sure everybody knows has been around for a long, long time, continues to grow nicely. More interestingly, we're seeing software in many places in our workplaces that we never saw software before. And there's a couple of things driving this trend. Traditionally we had to install software behind on-premise on company servers. And this was very expensive, and not many companies could afford best-in-class software. Today, people can buy software in a license model, and a software as a service model, and also the distribution of software and creation of software is much cheaper, as people can build software online and send it out. So we are seeing many small markets adopt technology, many physical therapy, many small and medium-sized businesses like pizza stores. There's huge software businesses being built around it, just growing the software markets. Software is replacing hardware. I'm sure everybody in this room sees this if you work in technology, that there's less and less people controlling your servers, and more people operating software that is controlling your AWS instance or another instance that sits at some large cloud IT infrastructure provider. And we're seeing this also in jobs and demand for people. The demand for software engineers is one of the fastest growing job industries in the world, whereas hardware engineers continues to decline. Won't belabor this point, but software is displacing labor and services. We see this every single day in news articles, from repetitive paralegal work to self-driving cars and repetitive driving. And then, the last point here that we're making is we're seeing every company become a software company. Traditionally, as we would invest in software business and think, who would buy this business in the future? It would be the larger software companies. But today we have large telcos, we have large healthcare businesses, we have large media companies, large manufacturers spending billions and billions of dollars acquiring software businesses as they think that the software is kind of core to what they think in the future. Summary, we believe that there's just really nice long-term trends around the importance of software, and we're going to continue to invest behind those. So talking about investing behind those trends, we kind of take two approaches to investing in Europe and in European technology companies, in particular software businesses. We internally kind of coin them sort of continental champions on one side, and this hopping the pond on the second side. Let me just talk a little bit about those in a moment. One thing that we've seen in being really successful for a lot of European startups has been companies that deal with things like the European complexity. There's 31 countries in the European Economic Area. There's 24 languages, working languages in Europe. This creates complexity that startups in Europe have to deal with from the beginning, and that the international competitors may or may not want to deal with the regulations associated with different geographies, converting software into different languages. Europe does have its own specific regulations like GDPR, which I'm sure is close to everybody's heart. Navigating those things, we've seen some nice businesses just being built around that theme. And not to mention country-specific laws. Accounting principles are different in different countries. So we see some software businesses being built, for Europe, and we're big believers in businesses that are built, for Europe, addressing European problems. We also see some really nice, what we would think about as continental champions, built behind the theme that Europe is the best globally at some things. We as Europeans have almost 700 million tourists every single year, which is significantly more than North America, or than almost anywhere in the world. We are one of the largest car producers in the world, and see if you can really dominate that market as a startup. We've big belief in that. And as well, Europe is just a large addressable market, as we talked about on some of the initial slides. The second theme of investing that we have in Europe is just what we coin internally as hopping the pond. And we see many companies that look at the US market and see a single currency and see a single language and say, oh, if we could expand into the US, we would we'd be able to explode the size of our business. And we see that that there are certain characteristics of businesses that lend themselves to that very, very nicely. And there's also some challenges that come with that. So we don't necessarily think that is for everybody, but when it is the case, we do try and drive this with our businesses. I'd say competitive advantages that European businesses we often see is that they often have best-in-class technologies, coming from some of the best technical universities in the world. We often see a more fiscally responsible culture in European startups, as funding may or may not have been as robust for funding options may not have been robust for startups. And we see companies that have had to deal with a lot of complexity in their youth, which creates a certain level of maturity as they expand into the US markets. But there's challenges going to the US as well. Time zone challenges being obvious ones. Sales and marketing DNA is is quite different in Europe than it is in more of an aggressive culture in the US. And there's often a broader competitive landscape in the US as well. So we do exercise caution as companies do and startups do think about expanding into the US. So what companies do we think can do really well in the US? And typically we look for businesses that have already had some success in Europe. We look for businesses where the CEO or the founder is willing to move to the US to drive the culture in the US. We think long and hard about where do you pick offices for talent and to optimize for things like time zone. And how do you leverage your large customers? If Vodafone or somebody is a customer, how do you leverage them in helping getting into the US? So this theme of hopping the pond is an important investment theme for us as well. So very quickly, I see the flashing light here with 30 seconds. In conclusion, we believe we're in the early stages of technology and a software revolution. Europe has the economies, it has the education and demographics to really capitalize on this. And we think European businesses can be successful both here in Europe and expanding into the US. We do a lot to help our businesses over time. Whether it's landing anchor accounts, whether it's recruiting executives here or in America, whether it's branding or whether it's product advice. And if anybody here has a startup or anybody here thinks that we can be helpful to them, feel free to email me. My email address is just paul@battery.com, and we would love to talk some more. And that is it. Thank you.